address some of your concerns before we dive down into my six-figure dividend stock portfolio, and I give you guys my weekly updates. Now, these concerns are surrounding my current sponsorship deals. Some of you reached out to me on a personal level and told me how these sponsors are hindering my YouTube channel. So in an attempt to be 100 transparent, I'm going to reveal to you how much money I've made off these sponsors, why I'm doing it, and what I'm going to do moving forward to address some of your concerns. Now, before we get into that, I want to preface this video from one I watched yesterday from another YouTuber by the name of Kid Behind a Camera, who revealed the millions of dollars he's been making off AdSense revenue from YouTube, and he touches base on what he thinks about sponsorship deals.
And so, YouTube started popping off to where most of your wealth is from the AdSense that the video is generated.
Right.
So where you haven't done many brand deals.
I don't do them, yeah.
And merch hasn't been a big thing.
A lot of people wonder why I don't do this stuff, and it might be stupid. I've turned down $50,000, $75,000, $100,000 brand deals, and the reason that I turned those down is because I've got enough, right? I want more, but I don't want to alienate or piss off the fans that I have by making them sit through a brand deal if I can help it. If I need it, I'm going to do it, right? Like, if I go broke, I'm starting an OnlyFans, right?
Now, not all of us have had the luxury of making millions of dollars off AdSense from our YouTube channels. In fact, I've only made $5,000 year to date off my YouTube channel, and I'm posting 6 videos a week that take about 4 hours a day of my time to really only make about $20 in AdSense revenues. I'm by no means making a huge amount of income, and the only reason that I've been able to make this even somewhat sustainable is through something that we created called the chartmaster.com, which is our custom spreadsheets, which promoting it through YouTube has led me to making an extra $500 a month. So combine that with my YouTube income, currently it would just be over $1,000 a month divided out by this entire year. But I want to reveal to you guys right now how much I have made off sponsors. For the current about half dozen videos that I've made over the last 4 months, I have walked away with over $10,000, pay anywhere from $700 to $1,500 US per video. And even though this is making YouTube way more sustainable for me, it is starting to turn it into a full-time career, which has been so stress relieving after losing my career through this pandemic. And I appreciate you guys kind of putting up with me through this. And if these aren't the kind of videos you guys want to watch, I'm not going to keep making them. So to address some of these problems moving forward, as of right now, I only have one more gold video to make next week. After I am done that, I will take a break from doing any sponsored videos with companies I don't particularly agree with, or I don't think that you guys are going to get the most value out of. And I do appreciate the comments of people that say they watch all of the ads in my videos to help me get paid, and anybody that does watch those sponsorship videos indirectly are helping me, even if you don't agree with those companies, guys. But I don't want to cause that friction, so what I'm going to do instead is, moving forward, I will only ever focus on sponsorship deals that I know will benefit me and benefit you as an end user, guys. And it's going to make it a little harder for me to be making the kind of income I have, but I'm willing to make that sacrifice if at the end of the day you guys get more value out of my channel. In the clarity of my transparency, before we dive down into the six-figure portfolio, consider hitting that like button and let's jump right into this. Welcome back, the passive income investors. So getting right into this, just to start with a quick portfolio overview, guys. We finished going into yesterday's close sitting at $206,593, and I can't believe I'm saying that, and I don't know how the market's been pulling up so high with the fear of a second lockdown coming, but I am not complaining at all because I am still buying stock. In fact, I purchased some more stock, which we'll get into when we get into the individual brokerage accounts, but because of that purchase, I was able to get my dividend yield up to $7,900 and almost $50 annually. My goal by the end of this year is to get that dividend come over $8,000, and I got about a month and a half to do so. So I'm kind of looking forward to that milestone as it is. But other than that, guys, I have been stacking cash still fairly aggressively. So I'm still abiding by like this 50-50 split rule, where basically I'm taking 50% of my working income, I'm putting it into stocks, and the other 50% I'm putting away into cash emergency fund, which I may end up using to just pay my taxes. But I built that up now to about $5,401, which now makes up a healthy 3% of the overall portfolio. And my end goal goal with my emergency fund, which would have been a lot higher by now if I didn't have to purchase that car. I want to get it up to about 15 to 20,000 or 6 to 12 months of my income as an emergency fund, which again, right now I think is more appropriate than ever, just in case we head into another crash that I can't predict. If something else happens, I just never want to have to tap into my portfolio except for the dividend income if I so choose. So I think that puts us in a healthy position. But what has been driving the portfolio this week by far, guys, has been the lower half of the market when we're talking about my REITs, my financials, which doesn't make up a huge percentage difference on the pie chart overall, but all of these companies jumping up about 5% has drove my portfolio up to pretty much all-time highs here. So let's get into these individual brokerage accounts. I'll show you guys the actual individual stocks that are rallying, and we're going to take a look at my dividend income that I can project to get for the rest of this month out of each one of these accounts. So just taking a look in my TFSA, my biggest driver for dividend income, it has been my banks and my REITs here, guys. We can see RioCan is holding up over $16 a share. And along with my banks, guys, we got CM crushing it right now. We got BNS coming back. I am so grateful that you might recall about a month ago, I took profits off Apple and I basically divvied up into BNS and CM, which was the equivalent of about 1,000 or 1,500 each. I'm grateful that I did it. Cost averaged me down and we're starting to see a little bit of a rebound here. And taking a look at the US side of the border, guys, I mean, we got MO coming back. And I think MO has rallied a nice little bit here, primarily due to the fact that we're getting decriminalization and a likelihood in the future we're going to see a full federally legal MJ market in the US. And we all know MO has ties to Kron and some of the other MJ stocks. Now, after the election, though Trump didn't win, though he would rebuttal that, and we're going to find out how that plays out. GEO didn't really respond to the upside or the downside. It has been trending flat around $9 a share. And other than that, guys, Southern Company still rallying really nicely here, pulling up the portfolio a little bit here too, guys. So it's really nice to see when tech levels off, that if you find a nice balance between all of these different sectors of the market, even though tech sells off, your portfolio can still hit all-time highs based on these lower half stocks that people probably don't find nearly as appealing for capital growth. But taking a look at the dividend income, I already got some off RioCan, which is why we can see the cash position is built up a little bit here. But overall, the dividend income I will still receive is from Northland Power. I got some coming out of Apple and BTI, which is going to be a super fat check, which I'm looking forward to kind of divvying into maybe my first investment into maybe Unilever, Kimberly-Clark. I haven't exactly decided yet, so I'll be on the fence, but I'll let you guys know when I make that purchase decision. And taking a look at my managed account, not a lot going on here other than RioCan has rebounded. You might remember last Friday I was in the red on this one, and this is where I have $4,500 leverage from my line of credit. Not a whole lot going on in here, guys. I'm still getting the regular checks coming out of RioCan, which I'm primarily right now just using to pay down the debt. And just taking a look, yeah, dividend income hasn't changed here, guys. Still making $1,025. Let's hope RioCan sees a continued rally, at which hopefully their board doesn't see the need to do any kind of dividend cuts. Taking a look at my RR to the S to the P, guys, one of my favorite accounts this year, where all my capital gains have come from, which, by the way, even though it looks like I'm making a stupid amount of money, I can't really draw against this account without losing 50% of it. So yeah, I made, 30 grand off Tesla in this account, made up for huge gains, but this is why I still have to take on some of these sponsored deals to keep up with the cash flow. But we pulled back from the all-time highs thanks to Tesla pulling back. We saw a bit of a pullback in Pepsi, but J&J still holding up pretty nicely overall with no real dividend income projected until December. Not much to look forward to in this account. It's going to be pretty much a boring sitting account until next year, maybe when I can add more capital to it. And then finally, the account where I did some purchasing, I actually bought some more TD stock. I told you guys this is where my focus is probably going to be moving forward for the rest of the year, just to continue building out the financial sector, which currently makes up about a 12% weighting and about 18% of my overall dividend income. I don't mind getting that a little higher because I just trust the banks. I believe they're trading at discounts, and I like the 5% yields that I'm able to cap off of them. So I only purchased about another $750 worth of stock, which actually brought it up to finally a 1% weighting in the portfolio overview, becoming the smallest holding in my entire portfolio here, guys. But I'm not really complaining. I'm very happy with this portfolio, as everything right now continues to hold up in the green. I'm very happy with this account, which is currently worth $18,580. I have another goal to not only get to about $8,000 in annual income. I would love to see my RBC account get over $20,000 this year. And just taking a look at the broader markets on my StockTwits account, guys, there's not going to be a whole lot going on in tech, I think, except for the fact that we are heading into what will likely be a second lockdown. And I made a video yesterday telling you guys that, if we continue seeing lockdowns with no real clear light at the end of the tunnel, tech is going to continue to perform fine. But it's nice to see these lower half of the stocks start coming up. I don't think they're going to crash like they did, but I'm going to leave that. If you guys want to watch my yesterday's video, I really break down a lot of the stuff that I'm talking about here. And like I said, just to finish up here, guys, I'm going to cut back huge on these sponsored deals. It is going to hinder some of my income, but I think it's worth it over the long haul to continue growing my channel and making you guys as happy as possible. And then moving forward, I will only focus on things that, though might not make me as much money, I know will provide the most value value to all of you overall. And I hope you can appreciate that and see the position that I'm sitting in. But in light of all of this, I'd love to know what you think in that comment section below. But stay cool, stay awesome, and I look forward to catching you guys tomorrow.